Focus. Ideate. Innovate. Enable.
Mirae Asset Mutual Fund and CNBC TV 18 present Sustainable Investing with ESG.
Traditionally, investors depended just on financial reports of companies before investing in them. But today, the tech-savvy, well-traveled and globally exposed investor is far more environmentally conscious, socially aware, and also ethically responsible. Investments are not just about profits, they're also about the companies creating a positive impact on people and on our planet. This ESG approach to investing, where E stands for environmental, S for social, and G for governance, is fast gaining momentum, and investors are evaluating companies on all these fronts. Hello and welcome to this special conversation, Sustainable Investing with ESG. This is an investor education initiative by Mirae Asset Mutual Fund and CNBC TV 18. I'm Ritu Bhandari, and to tell us all about ESG investing, I'm joined by two very eminent industry experts today. Let me welcome them, Swaroop Mohanty, CEO of Mirae Asset Investment Managers India, and Mukesh Agarwal, CEO of NSE Indices. Welcome, gentlemen. Thank you very much for joining us here today. Well, investors are indeed today trying to ensure that their values and their belief systems are somewhat reflected in the investments they make. So, Swaroop, let me begin the conversation by asking you to explain to our viewers what ESG investing really means and why is this form of investing suddenly becoming all popular across the world?
I'm Ritu. I think you summed it up in your opening remarks. In other terms or in simple terms, ESG investing can be termed as investment in companies, those that focus on, say, the planet, their people, and profits. In general, it's observed that an organization that blends all these three P's into its core corporate structure, they tend to then have a competitive advantage over others, which in turn translates to sustainable profits in the long run. Generally, an investment analyst, as you rightly pointed out, for any stock or portfolio remains within the realms of, say, the financial numbers as stated. ESG investing provides that extra non-financial information that helps in identifying long-term sustainability of the business over the years. That is where ESG makes this basic difference of crossing over just the balance sheet or the financial statements and gets into other things like you put it rightfully, there is an increased focus on contribution of the society by rewarding companies which aim for sustainable development. The investors want to avoid companies which have poor governance or a negative social behavior. For example, 65% of global consumers are making belief-driven purchases, which is when a consumer sort of chooses principle over product. There has been a rise in the change in climatic conditions across the world. Climate risk is now termed as a critical movement or a very heavy investment risk among large asset managers. The opportunity to align investments with one's core value and belief without compromising on financial returns has contributed to the growth of sustainable investing globally.
Let me also bring in Mukesh. Mukesh, the National Stock Exchange has launched 3 ESG indices in a short span of time. Give us a sense of what was the thought process behind doing this?
Yeah, so as all of you said, investors are becoming aware about the society, the environment, the employees, etc. So what we have seen that globally, the ESG investing is gaining momentum. And in India, it is just started. Now, if you look at it globally, SRI investment, which is sustainable investments, which was around $30 trillion at the end of 2018, as per Bank of America Merrill Lynch study, it is expected to add another 15-20 trillion over the next 15-20 years. Similarly, if you look at the ESG funds, which includes both passive as well as active funds, the AUM at the end of 2019 was around $220 billion. And as per a study done by BlackRock, it is expected to grow to 1.2 trillion, which is 6 times in the next 10 years. So given the increased momentum, increased traction for ESG-based investments, that's why we thought that this will become, going forward, this will become popular in India also. So that's why we have launched 3 NSE or Nifty 100 ESG indices, 3 variants of Nifty 100 ESG indices. And we believe that by launching this indices, it will help in involving the ESG market going forward.
Right. And let me also talk a little bit about the COVID-19 impact. Swaroop, COVID-19 is perhaps the biggest humanitarian crisis that we've seen in recent times, in our lifetimes at least. Has it played a significant role in the sudden increased interest in ESG investing?
ESG funds have, in general, outperformed non-ESG funds during the times of COVID-19. In this period of the last 6-7 months is how they have also fared on the performance part. The COVID-19 has brought up many questions, as you rightly said, and they sort of bring to the fore how the companies have treated, say, their employees during the pandemic. What are the steps taken by the companies for providing healthcare and other related facilities? What are the safety measures made available, say, to the people at their workplaces? The COVID-19 also might mark a dramatic shift in preference of investments, where investor will prefer sustainability over others.
Mukesh, while we were talking about the three indices that NSE has launched as far as ESG is concerned, what are the parameters that you are using to identify good ESG-driven companies, and how do these three indices really differ from each other?
Yeah. So as you mentioned, today we have three NSE Nifty 100 ESG indices, three variants of that. And so what we have done is we are trying to give an option to the investors wherein we are giving three indices, which includes companies which have performed well on ESG scores or which have managed their ESG risks better. Now let's start with the base index. I think, as I told you, we have Nifty 100 as the base index, which comprises of top 100 stocks listed on NSE. So out of which, what we do to start with, we remove any company which is involved in four industries, which is alcohol, tobacco, gambling, and controversial weapons. So out of this 100, approximately three companies get excluded from here. And then after that, what we also do is we exclude companies which have scored 4 or 5 on a ESG controversy score, which is given by Sustainalytics, the scoring provider to us, on a scale of 1:5. So on a scale of 1 to 5, companies which have scored 4 and 5 on ESG controversy score, they also removed. So overall, from Nifty 100, by including these two factors, we exclude 11 companies. And after excluding these 11 companies, we are left with 89 companies. These 89 companies are part of our first index, which is called Nifty 100 ESG Index. So this is the first index. The second index is Nifty 100 ESG Enhanced Index. So what we do is, from these 89 companies which are part of Nifty 100 ESG Index, we exclude companies which have scored less than 50 on a scale of 0 to 100. 100 is the best. So companies which have scored less than 50 on the ESG scores, those companies are excluded. And after that, we are left with 85 companies, and those companies constitute the index which is called Nifty 100 ESG Enhanced Index. So these are the two indices we have. The third index, what we have created, is called Nifty 100 ESG Sector Leader Index. So here, and what we do is, as we have done in the other two indices, we have excluded companies which are involved in those four basic industries, plus companies which have a controversy score of 4 and 5. So this excludes 11 companies. After that, what we do here, the scale which we are using is not the ESG scoring, but what we are using is, we use ESG risk scores. So ESG risk score is, again, they are scored on 0 to 100. So 0 risk is the best, 100 risk is the highest risk. So what we do is we exclude companies which have an ESG risk score of more than 40. So any company which has got a ESG risk score of more than 40, they're excluded. So all companies with a ESG risk score of less than 40 are included. From that, what we do is we compare the companies which are left after doing the above exercise. We compare the risk scores of these companies with the global sub-industry risk scores. So just let me chip in over here. So what we are doing is we don't do the industry risk scores or ESG scores ourselves. We are sourcing these risk scores from Sustainalytics, which is a global leader in ESG scoring. So what they do is, when they give us the ESG scores and they give us the ESG risk scores, they also give us the global industry-wise average risk score. So what we do is, from our top Nifty 100, we compare the companies, their risk scores with the global average industry risk scores, and any company which has got whose average risk score is more than the global average, we exclude those companies also. So after that, from whatever companies we are left from each sector, we include companies which are leader per se on the ESG score, means companies which score higher on the ESG scores, they are included. And by doing all that, we are left with 48 stocks. So we have created an index called Nifty 100 ESG Sector Leader Index of 48 stocks, which includes basically top 100 out of top 100 stocks which are ESG leaders and which scored better than the global peers in the ESG scores. So this is the third index which we have created.
Right. Okay. And talking about the investor perspective, Swaroop, as far as the larger perspective is concerned, if you had to break it down for investors in terms of environmental, social, and governance aspects, how do they decide that a company is good or bad on all these terms? And what is the best vehicle for ESG investing?
See, I think that's a very interesting question because, except for some companies which are ethically and, are or probably socially in questionable businesses, generally companies cannot be simply classified as good or bad in terms of ESG. ESG investing is based on evaluating on a lot of holistic parameters. For instance, Sustainalytics, the organization Mukeshji has been referring to, is one of the largest global research providers for ESG. It considers more than 150 parameters before arriving at its ESG risk rating. It is also important to also consider how well the company is managing its ESG risk relative to its peer in the sector it operates. So apart from all of this comes the basic root thing, and that is the corporate governance of any company. Because at the end of the day, it's the governance and the management which can make the change. And any company which is not managed well, it cannot lead to sustainable results over a period of time. So when you look at all this, the factors become pretty critical and it's pretty comprehensive, and that leads to an ESG score.
All right. On that note, let's head into a short break right now. But the conversation on sustainable investing with ESG continues on the other side. Stay with us on CNBC TV 18.
Mirae Asset Mutual Fund and CNBC TV 18 present Sustainable Investing with ESG.
Welcome back. You are watching Sustainable Investing with ESG, an investor education initiative by Mirae Asset Mutual Fund and CNBC TV 18. Well, we are talking all about sustainable investing. And Mukesh, I want to ask you, what are the risks and rewards associated with ESG investing? This is fairly at a nascent stage in India. What are your tips to investors?
I think my basic tip to the investor would be always look for risk-adjusted returns whenever one is going for investments. I think that is the basic principle which one should follow. Now, if you look at the ESG investing, I think by following the ESG investing theme, one gets exposure to companies which have long-term sustainable operations. You will not get exposure to companies which might get into controversy in the long run, given the nature of the businesses. So I think by doing all that, one is making sure that the risk-adjusted returns are higher. Now, a common belief is that if I take exposure or I invest based on ESG theme, I might have to sacrifice my returns, which is not the fact, I think, because as I mentioned to you earlier, we have three indices on Nifty 100, which are Nifty 100 ESG, Nifty 100 ESG Enhanced, and Nifty 100 ESG Sector Leader Index. Here, what we have seen that if you look at the returns of these three indices, and compare the performance of these three indices with the base index, which is Nifty 100. So over a period of 3 years, 5 years, and also since inception, the annualized returns of these three indices are higher than the base index, which is Nifty 100. This trend is seen not only in India, but also this is seen in globally. Globally, if you look at, all of us know that MSCI is the global leader in the index business. So they have a global index called MSCI All Country World Index. For the same index, they have also created an ESG version. And if you look at the returns of these two indices, that is the base index, MSCI ACWI index and MSCI ACWI ESG index. So over a period of 5 years, the ESG index has given annualized returns which are higher than the base index by almost 0.4% per year. So both these studies show that if an investor is following an ESG theme investing, one need not sacrifice the returns. I think that is a good study. And second is risk-adjusted returns will always be higher in ESG investment because you are investing in companies which have got long-term sustainable operations. So that is on the positive side. On the risk, I think probably given the nascent stage of ESG scoring and ESG reporting, so an investor might not be able to capture all the ESG risk associated with the company. That is one. Second is, if one excludes companies based on the ESG scoring, low scoring or high ESG risk, then some of those companies might give higher returns in the short term, but I think those are short-term aberrations and investors should not worry about it.
Right. Okay. And Swaroop, How should an investor really go about evaluating companies? Is there a universally accepted way to measure the ESG performance of companies?
No, there is no universally accepted way of measuring the performance of companies on ESG parameters. We need to understand that ESG data are by and large quantitative in nature, and assimilating all this information requires a domain expertise, which is significantly different from simply evaluating companies based on financial parameters. That is why we need the help of global research and providers such as Sustainalytics, which we are referring to throughout this discussion. These are people who specialize in understanding and assessing the impact of an ESG event and help in providing objective analysis of material ESG risk to which companies are exposed. Using their data point, it can serve as a good starting or a reference point of integrating ESG decisions into an investment framework.
Right. Okay. So, Mukesh, you were earlier mentioning about decent returns from ESG investing all around the world. Let's focus a little bit on the Indian investor. As far as the Indian investor is concerned, where are we on the awareness front as far as ESG investing is concerned? And are Indian investors really considering this as a good opportunity as of now?
See, I would say that Indian investors are still not aware about ESG investing. So if you look at it today in India, we have only, as of now, we have 4 funds available in ESG investing. And 2 years back, only 1 or 2 funds are available. So that the whole concept of ESG investing is just picking up. Investors will take time to realize the benefits of ESG investing or risk of not investing based on ESG parameters or ESG themes. So it will take some time. So with the more launch of funds, in investor awareness will increase. And once the investor awareness increase, I'm sure investors will go for investing in ESG-based themes. And another important thing is the moment investors realize that one did not sacrifice returns for investing based on ESG themes, that itself will be attractive for the investors to invest based on ESG themes.
Right, absolutely. Swaroop, you want to weigh in on that as well? How prepared do you think Indians are to invest in ESG companies?
See, I think in the last 2-3 years, given the rise of the governance fiasco, we've seen some Indian investors actually realizing that it is important to consider and evaluate non-financial information as well while investing. We are observing that people in general are becoming conscious on their consumption. We Indians have started perceiving the need to contribute towards the society by meeting the needs of the present without compromising, as Mukesh keeps on telling us, on the ability of future generations to meet our own needs. One thing which Indian investors worry is whether he or she will compromise on his financial returns while investing in ESG funds. I think Mukesh has discussed that very well. No one does not, and to our surprise, the empirical study analysis have all the analyses have shown that there is no performance penalty associated with ESG investing. In fact, ESG funds have not only outperformed but have exhibited lower volatility, which translates into a much better risk return profile for investors. So that's where the future lies. And once a person is convinced on the fact that he or she is not sacrificing any return, in fact, or doing something good, it will take a different turn like it has taken worldwide.
Right. All right. And the next step to that would be perhaps to build a highly rated ESG portfolio. Mukesh, how do investors go about doing that? How do they identify the top stocks and ensure that the portfolio is significantly diversified?
So I think my advice here would be, because ESG research, which is available, it is very, very expensive. I don't think retail investors would be able to have access to the ESG research. And second thing is the form in which it is available, it is not very easy to comprehend. So my advice to the retail investors would be they should go for investing either in passive funds or active funds, which are based on ESG theme. Passive funds basically means investing in ETFs or index funds linked to Nifty ESG indices, or invest in active ESG theme funds, which are benchmarking the performance against Nifty ESG indices. So that is the route which one should follow, because doing a direct research and stock picking based on ESG will be difficult and is expensive.
Right. Okay. So that was a lot about the investor perspective. Let me shift focus also to Indian companies and India Inc. at large. Swaroop, is India Inc. taking enough cognizance of ESG issues today? Are they making an effort to improve their ESG ratings? And as we embrace a whole new normal, how do you see this landscape really shifting?
In the context of India, we've seen time and again how big corporates have failed and their investors have lost their sustainable wealth due to poor governance issues, product issues such as adulteration in drugs, environmental damages, leading to closure of plants have also happened in India. And more importantly, investors or provider of the capital have penalized such companies. As a result of which, Indian companies have started taking cognizance of the material ESG issues. They are aware that all the stakeholders will be closely monitoring any development related to ESG. Also, capital market regulators, SEBI has pushed it from its end that all top 500 companies are required to incorporate ESG practices or make business responsibility reports, which is the BRR. Partly driven by the regulators and partly driven by desire to see action from the stakeholders. This has resulted in incorporation of ESG practices in India.
Right. Okay. And Mukesh, you want to add the NSE perspective to that?
One thing is what we have seen is like companies which are not included in our ESG index, they have started interacting with us. So they keep asking us why my company is not included in your index, what I need to do. So I think as investors push for ESG based investments, corporates will become more aware about ESG compliance. I'm sure that they will also try to make sure that their ESG risks are managed well, and they do all the things necessary to make sure that they score high on ESGs.
All right. Well, gentlemen, thank you very much for joining us here today and sharing those very valuable insights into sustainable investing with ESG, a practice that's increasingly gaining momentum as investors become far more socially responsible. Well, that's a wrap of this special conversation. News and updates continue on CNBC TV 18. Until next time, stay safe. Goodbye.
Mirae Asset Mutual Fund and CNBC TV 18 present Sustainable Investing with ESG. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.